had South African bonds following the rand weaker by midday today after South Africa's current account deficit expanded to 5.1% of GDP in the fourth quarter of last year from 4.3% in the third quarter, wider than market expectations. Wikus Furstenberg, portfolio manager at Futuregrowth, joins us on the line now to take a closer look at what's been playing out in the fixed income space. Wikus, thanks so much for your time today. So as I say, the bond market following the rand weaker today on the back of disappointing economic data on the local scene. But overall, it's the assessment of growth or lack thereof that was illustrated by the SARB's quarterly bulletin that's gotten quite a bit of attention, right?
Hi, Alishia. Yeah, in terms of growth, I think we're all worried about that. It certainly still doesn't look great at all. No surprise there. That the link to the sovereign credit rating obviously is very strong. So we all know that if we can't get that going and we can't create more employment, then that risk of a downgrade is really looming later this year.
Especially if you've got a Chinese economy that's stuttering. I mean, Chinese trade numbers this morning disappointing as well. And while that speaks to our trade deficit coming in wider, it equally speaks to, our lack of competitiveness in the manufacturing sector, in terms of being able to leverage off a weaker rand right now. But, we can't ignore the fact that it's within a waning demand scenario globally.
Oh, for sure. It's impossible for a small open economy like South Africa with all its structural issues, low productivity, and the things you've mentioned already, to compete in a globe where we're all battling with growth. We all know that there's already 5 central banks that's cut interest rates into negative levels, into negative territory. So we're certainly going to sort of battle. And the latest numbers from China, that 25% drop in exports, that illustrates, again, it's not as easy as what the market thought just until yesterday.
And would that then take us through the kind of activity or interest we saw at today's local bond auction?
The auction didn't go that badly. It's still sort of traded through market at the time of the auction at 11 this morning, South African time. So not a bad take-up, I guess. But I think it should also be seen in the light of what happened the past few days, with the risk on that we've seen before we had the latest Chinese data. And of course, also the fact that, in terms of levels, bond yields are fairly high. So it doesn't look too bad. So not a bad auction at all, and it was very similar to the previous week.
What are you anticipating in terms of the announcement out of the ECB come Thursday? Because that is where the spotlight's now turned to, and the expectation of, in terms of the broad consensus right now, is that we are going to see more stimulus measures being introduced.
I think quite rightly so. The farm market, for instance, is already expecting that 10 basis point cut in the ECB's rate. 90% probability of happening. So I think the issue here is if the ECB disappoints markets, what the market reaction is going to be. That's the one side. The second thing is, at the end of the day, it's also about so what, So it's great for them to make all these announcements, but, we're all still battling. And why is it that we're not getting out of this rut? And I think that is going to be a more longer-term issue that we have to deal with. And of course, in terms of central bank activity, we also expect some action we're also obviously looking forward to next week's central bank meeting on the local side, where, what it's worth, we don't really expect any action for now. I think we've done well that 50 basis point hike we've seen a month ago or so.
Yeah, with all of this, you've got volatility in the trend, Wikus. What's your outlook as far as the rand is concerned? I know it's a hard one to peg right now, but what kind of trading range have you pegged out for the medium term?
Lisa, I think it's, the levels we've hit last week is probably fair to say that's as best as we will see in the short term. And I think the emphasis is on volatility. With us battling to sort of narrow the budget deficit, the current account deficit, and with global growth keep disappointing, it is hard to see why the currency should trade stronger, and we would expect volatility to continue.
Well, let's leave it there, Wikus. Thanks so much for having joined us on the line today. Wikus Furstenberg is Portfolio Manager at Futuregrowth.